Welcome to Issues and Answers with your host, Diane Kinderwater. Issues and Answers is presented as a public service to inform, educate, and better the lives of New Mexicans. And now, Issues and Answers with your host, Diane Kinderwater.
It's here. I'm sorry to be the bearer of bad news, but you've got to, I don't want to tell you, you've got to pay your taxes. I'm not going to tell you that because I don't want to tell you that. But taxes are to be paid by April 15th, and your tax documentation for 2020 need to be in, according to the government, by April 15th. That's all I'm going to say about it. I don't want to be the bearer of bad news. But what I have good news is I have 2 enrolled agents who are tax preparers and enrolled agents licensed by the US Treasury who are going to give us some helpful tips, helpful, I guess I could call it advice. They may correct me on that. Maybe they can't give the advice. But what we can do to ease the pain of paying these taxes that run our government, our local, state, and federal government. So, with that said, I'm pleased to have them on the show because we're all going to learn a lot. And every year we got to go through this, but I'm going to make it less painful because they're 2 lovely ladies who know a lot of information. So please stay with us as we discuss the government requires that your taxes are paid by April 15th. We'll be back right after this. Oh, we're laughing because we don't want to cry. I have 2 enrolled agents with me, Shelly Barker and Lynne Shupp. They were on our show at the end of 2022 discussing what we needed to do at the end of the year. Now we're going to talk about what we need to do to prepare not only for our 2022 taxes that are due April 15th, but really this year what we should be doing for next year, because you know what? It goes on and on and on and on until we die. Correct, Lynne Shupp?
Correct, it does.
We keep paying until we die. Thank you, Shelly Barker, for all that you're doing. And again, you are enrolled agents. You're licensed by the US Treasury to help people if they're audited or whatever paperwork. You can contact an enrolled agent to help you through all that. They would represent you. But also, enrolled agents now do tax preparation. But there are also a new city law in Albuquerque, Lynne, about tax preparers for this year, which is new.
Yes, it is. And they've worked on it for about a year now to try and organize and, I don't want to say regulate, but give guidance and rules for people who prepare taxes that they need to follow and they need to stay in compliance with. It generally involves billing and education disclosures, following the standard rules of what you charge, how you charge it, signing the return. Now, there's an exemption for tax attorneys, for CPAs, and for enrolled agents, but a person who is a tax preparer with just your PTIN number has to meet the compliance standards of this ordinance. And it's only within the city of Albuquerque, but it's put there for consumer protection, so that when you have your taxes done, you know that you're getting all the appropriate performance.
What's a PTIN? Shelly, what's a PTIN? P10?
PTIN. It's an identification
PTIN.
number. It's an
Okay.
identification number for tax preparers who accept compensation for their work.
So everybody who in the past should have had a PTIN.
A PTIN number.
Now if they have a PTIN, they have to abide by this ordinance.
In Albuquerque.
In Albuquerque.
And this is something I think, adding to what Lynne just said, I think we've all read about fraudulent tax returns where a preparer will deduct excess deductions or make up children or whatever it takes to get a larger refund for the taxpayer. These are all fraudulent things to do, and this ordinance is trying to at least warn the taxpayer, okay, beware, ask questions, Find out what is on your tax return. Are these deductions valid? That type of thing. Just an awareness issue and a warning for all of our consumers.
What should we be asking? If they're willing to sign it, if they're putting in fraudulent.
Ask for their fee schedule. How do they charge? What are you being billed for? What is your bill going to be before you sign your side of the tax return and file it, and then are shocked?
And this is all in the ordinance. In fact, there is a taxpayer bill of rights that should be posted in these preparers' offices. So everyone should be aware, hopefully, knock on wood.
Let's talk, hopefully in the show we're going to cover red flags, avoiding audits, blah, 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 all these things, but let's start with what people do wrong in preparing for their taxes. Especially, let's start maybe with small businesses and then individuals. Lynn, what do we do wrong?
There's a disconnect between trained preparers and the consumer. If the consumer were trained on all these issues, they would know what to have and know what to bring in. But by their own definition of things, for example, a person who is in small business, they're a sole proprietor, it goes in their regular tax return, they're not filing a separate business return outside their 1040 return. And they may feel that they didn't make a profit, or it's not something that they do for a profit and it's a secondary thing, but they did earn money doing that, and they did have expenses doing that. So they may not report that on their...
Give me kind of an example. You lost me a little bit. It's a sole proprietor but has another business on the side. What do you...
No. An employee can work.
Oh, an employee who
get a W-2.
Gotcha.
But as a sideline, they have a welding business, or they...
Cake decorating business.
Or they do...
Photographer.
A tax preparation business.
Yeah, that too. But as a consumer who's not educated in all these areas, they may think, well, I only do it as a sideline, I didn't really make a profit, I'm not going to report all that, I only do it for fun. But in New Mexico, that is a business. And you earn money, you have to report that, you get to deduct your expenses against that, and their normal business expenses. Mileage if you drive, supplies, equipment, any of those things that would be involved in performing whatever your business is. And in addition, you're required to pay gross receipts or sales tax on the money that you earn.
Even if those people who put, let's say they work for government or they work for X company, they receive a W-2. They're paying income
that
tax.
is employee wages. Mm-hmm.
Then they have this side business they do from their kitchen table. They make a little bit of money. They declare that as income. They're paying taxes on it.
They do as a sole proprietor.
Can I back up just a little too? Because sometimes people who maybe make jewelry or walk dogs, pet sit, there is a difference between a for-profit business and a hobby. So Lynn is talking about someone who is in business to make some money, and
Sure.
we need to go down that road, that they pay income tax,
They pay
and Social Security tax, and what we call the gross
receipts, sales tax, gross receipts.
sales taxes.
In addition to the income,
Correct.
which they're paying on, they got to pay gross receipts.
And there's a distinct separation. Gross receipts are paid on income to the business. Income tax is paid on net profit. So one is gross profit, one is net profit. And it's a distinction that's not really clear to a lot of consumers, but it's two separate taxes.
And aren't you popular when you tell
Yes,
your customers
we are.
about this?
Well, we are very popular when the consumer gets the letter from the New Mexico Tax and Rev Department that says, we see where you have a Schedule C on your tax return, and we have no record of any gross receipts that you have paid. According to our calculations, you owe ka-ching, ka-ching, ka-ching.
and penalties.
And penalties and interest. Yes.
And they don't always send that letter the year that you start your business. They generally send it 2 to 5 years later. So there's an accumulation of the other things you don't want to pay, the penalties, the interest, whatever.
Well, gosh. What other mistakes do we make, Shelly Barker? Thank you for that, Lynn.
Well, I think you've already touched on some of the things. You know, everybody needs to sign their tax return.
That's the easy, okay.
Everybody needs to be aware of what is on their tax return. Questions need to be asked beforehand if you wanted to talk about tips, how to save taxes. You know, do you want to contribute to your IRA and get a deduction? Did you by any chance buy some windows or energy glass door frames? You know, there are credits there. Just be aware of
Electric
what is out there.
vehicles.
Electric vehicles is another deduction there. Realistically, though, Diane, in the world of tax preparation, which is now really driven by computer software, a math error doesn't exist on a computer, okay? It's not going to add and subtract incorrectly like it used to. So those errors are gone. Unfortunately, if you buy a tax preparation software program off of the shelf, you need to realize that you should know the answers to the questions that the program is asking you. It's going to be very, very accurate as long as you know how to answer the questions correctly.
Want to give us an example of that?
Well, there are two things that I could say on that front. Anytime you have income that goes on your tax return, other than perhaps self-employment income that you don't have a document for, there is a document that represents that. You can't say, well, take the interest that I had last year because it's about the same. You have to have this year's document, and when you do your own tax preparation on an online software product, you have to have that document as well. You have to enter certain numbers from it. It's a
How
requirement.
do people put mileage? I mean, especially now with the price of gas has gone skyrocketing. And of course, repairing our vehicles, everything has gone up because of inflation. How do people track mileage, or how are you supposed to track it?
Diane, and that's a wonderful question, because our mileage, our gas prices went so far up that we actually have a mileage rate for the first half of 2022, and it's about 7% more for the last half. So they have to track. They have to track. I personally use a paper product. I have a paper product in my car, and I write down the odometer when I'm going to work or delivering a tax return, or maybe representing New Mexico Society of Enrolled Agents on a television show. There are software applications that people can use.
But you're saying in the car, you have
In the
maybe
car.
just a tablet and write everything.
I do.
What do you tell your customers? What do you tell your clients, though?
I give them the choice of the paper product or a cell phone app. There are several of them out there that know when they are in the car, and all they have to do is tell the app, this was charitable, this was personal, this was business.
Oh my God, it's
I
really
know,
tracking
it's-
us. That's amazing.
Yes.
What do you tell your clients, Lynn?
That it has to be some form of written or
Documented.
mileage. And the big confusion for most consumers is you cannot switch from actual expenses to mileage on a year that they're paying high mileage for the government benefit, and then go back to actual expenses in the year that gas prices are high. You don't have that flexibility.
Oh, what are you saying? The government's giving you?
No, we're smiling because when someone buys a car, especially that big truck, the first question is, can I write my truck off? And the answer is, it depends. But there are choices you have to make. Lynn was talking about actual expenses, the cost of gas, the cost of the insurance, the cost of the tires, depreciating the vehicle, or this standard mileage allowance that most of us take. You can't go back and forth on a whim.
Oh, some people take the actual. Oh, I didn't know. I thought everyone had to do the standard.
No, we get some choices.
Oh, especially if you, what?
And there are ways to go over that individually with your client to determine which avenue is best for them.
I imagine a new vehicle would be different than an older vehicle, and
but you can't switch, so.
Within the year or the next year? Within the year. What are you saying?
No, ever.
Ever?
So you start with actual, you stay with actual. You
Come
start
on.
with mileage, you stay with
You
mileage.
make these rules.
And there are advantages and disadvantages to both. Actual expenses in years where the gas was high, that's a great advantage. Depreciating the vehicle goes along with that, and you only get that for a certain number of years. Then you don't get depreciation anymore. So if you're driving a lot and going to be doing it for a long time, mileage is generally your best route to go.
Because you could go forever.
There's options. I don't know if you can give us advice, but that was interesting to say mileage over the actual. I didn't know the actual existed, but again, we talked about mistakes.
Well,
How can we be
let's
smart?
talk about some planning. Here
Okay.
we are getting ready to go into 2023.
We're here in 2023. We're February, March, April. We're here.
We are here. How can we save taxes? What do we need to do?
Yes.
I had mentioned people who work, have earnings, have the ability to contribute to an individual retirement account, an IRA. That can be either a traditional IRA with the possibility of deducting it on the tax return, or you contribute to what we call a Roth IRA. You do not deduct it on your 2023 tax return, but you don't pay tax on it when you pull it out in later years. So there's some planning there.
Now we can contribute to 2022 up until April 15th on earned income.
Actually, I believe the date is April 15th.
Oh, what did I say?
I guess I registered the end of the year, but you can actually do your tax return and see if it will help you and contribute to an IRA by the deadline, April 15th.
For last year.
Yes.
Have an effective. And then again for 2023.
You just make a notation with whoever you're contributing to that this applies to the prior year.
Yes, make sure.
And one thing that I'd like to add some clarity to, your tax return is due April 15th. Business returns generally, not the sole proprietor, but separate business returns, March 15th. You can file for an extension, 6 months, on either one, because sometimes you don't have all your documentation, or something occurred and you have to go elsewhere to get more. If you file an extension, then you don't have to pay your taxes until business, September 15th, personal, October 15th. But there's a misconception, or kind of an urban myth or a misunderstanding, that once you file that extension, you don't have to pay until October or until September. But that is wrong. There are 2 penalties associated with not filing on April 15th with your individual return. If you're filing an extension, if you don't file it, the penalty is a failure to file penalty, which is separate from failure to pay. So you file the extension if you don't have all your documents, but you estimate what you're going to owe at that point and pay it.
By April 15th.
The extension extends
Just the paperwork.
the time to file, but not the time to
but you
pay.
got to pay still April 15th. What other shocking things can you share? No, that people are surprised, or
They're surprised
I'm
about
looking
that.
at the good tips. How about deductibles that they can take that they didn't know they could take? I want to hear about those.
Well, because of the large standard deduction, itemized deductions have some limitations. For people who want to transfer IRA money and not pay tax on it into a charity, there's a possibility to do that, and you have to look at a lot of contingencies to be able to do that. But that's one deduction that people don't often pick up on.
That is a very good point. If you are over 65, there is what we call a qualified charitable deduction, a QCD. If you are required to pull money out of your IRA, then that money you can contribute to a charity, and even though you're not deducting it on the charity, you are not paying tax on the contribution. So that is a real planning tool for our senior citizens who are philanthropic, is that the word I want, in the first place.
Yeah.
So there's a certain age, and I think it keeps changing, maybe,
72 right now.
is when, if you have an IRA, you have to start taking contributions. And it's a percentage?
Withdrawals.
Withdrawals. You have
Yes.
to start taking withdrawals. Not the whole thing, I imagine it's a percentage.
No, it's a percentage, and it's calculated.
It's based on the longevity. I am of the age where I am required to take a required minimum distribution. And it is based on my age. There are tables that
Yeah.
predict how long I am going to live.
150.
Well,
To get your money's worth.
Yeah, to get my money's worth. But that is what the minimum that I am required.
The minimum
to
you
pull out.
take, and you're saying if it's X amount, you have to pay taxes on that unless you contribute it to a
Well,
charity.
everything gets a little convoluted. We're talking about required minimum distributions that I have to take. Yes, I can take that and contribute it to a charity, but I can also do that if I am 65. I don't have to be, 70 and a half.
70 and a
The
half.
original, 70 and a half. Even though the required minimum distribution age is going up,
you
because
can
we are
start
living
taking it
longer
out and contributing it
contribute
sooner.
it. And then it is not taxable on the front page of the 10th.
But who to do it earlier if you're still earning it for the next couple of years?
Some people have unique circumstances. They don't have children, they don't have heirs to leave their money to, and they don't feel that they'll need all of it in their lifetime. So
Sooner the better.
If I contribute $10,000 to a charitable organization and it's not taxable on the front page of my return, my Social Security might not be as taxable because my adjusted gross income has gone down. So there are all kinds of factors that sort of play into this.
And that's the most interesting part of what we do. It's like a puzzle, and you
Yeah,
can put
that's
these
true.
pieces
That's true.
together
That's true. That's true.
to benefit the consumer in the best possible way.
Other tips, perhaps your consumers, your viewers, Diane, are looking at buying an electric vehicle. They are extending that credit. I think it's up to 30%, or no, it's an amount of money, $7,500. I'd have to look it up to make sure. But there are some wonderful opportunities. In the past, if you bought an electric vehicle, Tesla, for instance, sold so many that their electric credit ran out. They are coming back in 2023 so that all of the electric vehicles will be available for a
The
good
same
credit.
amount, because I vaguely remember thinking, oh, possibly mine, but you couldn't even, they weren't even manufactured enough.
Right, exactly.
So now it's coming back?
Coming
And
back.
Okay.
the one criteria is that it has to be assembled in this country.
That's right.
Okay, good to know.
But your dealer will tell you
All kinds of things.
where they're at with money that's available and whether or not the vehicle you're purchasing qualifies.
Yeah. And we used to have a credit where, if you did insulation or if you did energy windows and doors, that credit was $500, period. Now it's going to be extended so it can be up to $1,200 annually. So if people want to get the storm doors or the heat pump and things like that, it can be something that year after year
So if you-
helps on the taxes.
So if I invest in energy efficient windows,
Mm-hmm.
which I don't have, and I asked the window man, and they said, don't they know? But bad salesperson, you'd think they'd tell us. You're saying if I make the investment in 2023, this year,
Yes.
I can take a deduction or credit over
It's a credit. It's a reduction in your tax, yes.
over how many
Of
years?
up to $1,200. They haven't told us how many,
Oh.
so hopefully forever, until the
Well,
rules change. Until the rules change.
Now, the solar credit goes down this year. It was
2023.
for 2022 tax year, because it started out at 30% and then it went to 26%, and for 2022 it is supposed to be 22%.
And I think it goes back up to 30% in 2023, and that 30% lasts for 10 years, 2033. But it just is a lot of data to store.
But that's what makes your jobs fun. You get to no, but that's important things, because I heard about solar. I was like, oh, you got to get the roof fixed first.
New thing this year, I-bonds have been around for a long time, since before 2015. But you can purchase now an I-bond with your refund. There's a special form that you use, an 8888 form, and I-bonds pay very well. They recalculate every 6 months. If you do it with your refund, you're limited to a $5,000 purchase. And they're a 30-year bond, and you can take, after 18 months, you can take money out. You just have a 3-month penalty on earnings. But right now, they're paying 6.89, and that will change in December, I believe.
I know that's more interest than you can get at any bank account on
Absolutely.
any CD right now. I-bonds.
But now this show is airing in February, March, so. So it's
So
interesting.
the rate may adjust by then,
But
but you can do it with your tax refund.
do you have to do it with your refund?
No, you never had to do it with your refund. You could do it through what's called Treasury Direct.
Yeah, okay.
But you can get twice as much if you buy it that way. But that is an e-bond, and the ones you get with your tax refunds are a paper bond.
Actual piece of paper that you can hold in your hand.
So if people prefer that, that's the route to go for them.
Anything else? I want to talk more about all these after the show. Other credits. Some aren't going to be as good this year. Or how can we avoid an audit? I know and people working from home. That in the past used to signal an audit.
Well, and rewind that tape just a second, because
There's
what
so
you
much,
said
so much.
first, right? In the last 2 years, we have had wonderful stimulus money coming from the federal government. Our earned income tax credit has been higher and bigger. Our child tax credit went from $2,000 to $3,000, and they paid it out in a lot of it in advance. The babysitting, the dependent child care credit was higher. Everything is coming back to normal now.
More good news, Shelly
when you do your 2022 tax returns, you may be a little disappointed that the refund is less, just because we're back to 2019 pre-COVID rules.
Thank you, Lynne Shupp and Shelly Barker, enrolled agents.
Did we end on that? No.
It's not your fault, but you're here to help.
We are.
It's complicated. You have the information. You're licensed. Enrolled agents are enrolled with the US Treasury, the ones we write the checks to.
Yes.
You don't work for them, but you have their information and you're working for us. So thank you for that.
Thank you for that
service.
sentence. That was very well put. Thank you.
Thank you for your service. Shelly Barker, Lynne Shupp. Thanks for watching. I'm not to blame either. Best of luck. We'll see you next time. Bye-bye.
Issues and Answers with your host Diane Kinnewater is presented as a public service to inform, educate, and better the lives of New Mexicans. To comment on today's program or to purchase a copy of any Issues and Answers program, visit sunbroadcasting.org or call us at 505-345-1991.